oil marketing company stocks came in for some heavy-duty pummeling today. That's thanks to the currency impact. These are big importers. They require dollars to buy crude oil. But that apart, it's been a decent quarter for many of these companies, including IOC. The numbers have been driven by some high inventory gains. Anshu Sharma caught up with Sanjiv Singh, chairman of Indian Oil Corporation, and began by asking him about the guidance for GRMs in the quarters ahead.
Apart from impact of inventories, the GRMs are also affected by the cracks between the product prices and the crude prices, as well as the physical performance of the refineries. Now, if you look at the physical performance of the refineries, all the refineries of Indian Oil had done extremely well in this quarter. The distillates were higher than the last year first quarter, and this year distillates were 80.3 against 78.6 last year. Similarly, internal fuel and loss was 8.6% this year against 9% last year. So these two parameters, apart from capacity utilization, which was also marginally higher at 102.4 against 101.6% last year. So these parameters confirm that the quarter one this year, all the refineries of Indian Oil did extremely good in physical terms. The marginal lower GRM, if we talk about the net GRM, that is excluding the inventory impact, was marginally lower than the quarter one previous year. This year it was 5.18 against 6.44 last year. Was predominantly because of the lower cracks this year.
Coming to Iran sanction, what is the exposure to IOC, and have you heard any clarity with regards to sanctions imposed by US?
If we talk about Indian Oil, we are a large importer of Iran crude. Iran is one of our largest supplier of crude. The public sector companies or Indian refining companies also, on a country basis also, India is a large importer of Iran crude. And we are observing the situation very, very closely. Till date, because the banking channels are still open, we are still continuing to take Iran crude, and proportionately I can only say that on proportionate basis, whatever is our annual commitment, we have been taking, and we are still taking Iran crude. We are preparing ourselves. We are fully ready in case any cut is happening in the future months beyond the 4th November, which is today the deadline for the sanction to kick in. And Indian Oil is fully prepared to take alternate supplies from alternate sources, and we have assurances, we have options available to take care of any shortfall which might happen because of reduced Iran import.
How is the capital expenditure plan for this financial year, and how much have you already spent in the first quarter?
First quarter we spent nearly 5,500 crores during this year, and against the annual target of over 22,800 crores. So, and this is across different business lines, this is across different divisions, and we are very confident that we will meet our CapEx target for the year.
Okay, that was